In today's video, we take a look at everything to do with the stock, crypto, and commodities markets right now in what has been an incredible volatile start to 2020. The stock market looks to be crashing at this point. The crypto market is putting pressure on the downside, and commodities are, funnily enough, still going up. But will the stock market stop here, or is it coming back down? We'll take a look at all of that and more right now. Stay tuned, guys. It's sure to be a good one. Okay, welcome back everybody to the market close 20th of January 2022 and our show that goes through everything to do with the key levels, data, and everything else that you should be looking at right now in the markets. Let's think about what's going on right now. The headlines are saying stock market could drop another 10% soon, says a top strategist. Yes, the market pundits are coming out. They're starting to put in their crash figures, and we're going to start seeing things that are going to be drastic. People are going to be starting to call 50% drops, 30% drops, and 40% drops. The question is, will that actually occur? Let me know in the comments down below what your prediction is, top to bottom, for the stock market correction at this period. Is it going to stop right here, or maybe only go 15, 20% like many of us expect? Or is it going to be more? Let us know, and remember to subscribe if you enjoy market content that covers everything on the daily show. Let's move over to the stock market heat map here. It was growth under fire again. Nvidia, Amazon, Apple, Netflix after the close, the first big tech earnings got really obliterated. Massive sell-off there, and could be an opportunity for a lot of investors when they're starting to look at it. If you watched our previous video where we were talking about the rip, and then of course selling that rip, that's exactly what did occur. We saw a rip happen in the morning. It went up as much as 2%, and the switch was brutal. IWM led the charge, and the Nasdaq, the two kind of growthy, more bashed stock markets or stock indices at this stage, and then the algorithms got control and sold it off. A big switch here, upwards of 4% plus for the day. It doesn't bode well for the markets, but again, it's all about being able to clarify what's going on right now and to not freak out. And that's a lot of what we're here to discuss today. Should we be freaking out or shouldn't we? Let's think about some of the sectors that were doing better. Some of the beaten down sectors, actually TAN, solar, hitting a key technical support, holding a little bit better. Semiconductors down 3%. We will have a big breakdown of semiconductors a little bit later on, and we see the rest of the market across the board down. But it was really tech and just some of the defensives holding up as much as possible. Now we're in earnings season. We mentioned Netflix. Next week we start even bigger earnings, and then the week after that it's going to be a very volatile period. Remember as well, the Fed will be coming out to discuss the first rate hike, to discuss their statement. That's going to happen on Wednesday in New York. Make sure you have your economic calendar set. That's not only a big day for that, but it's going to be a big day for Tesla reports as well. So we'll have to find out whether they can continue the growth story. Let's look at some quick stats. We brought these in the previous video. These are stats around the idea of when the first rate hike actually happened, what happened to the stock market. So each time previously, it has dropped over the next 3 months. Now, we don't know what happened in between that period, but of course it was dropping and it did end up having weakness. The key here though is after 6 months and after 12 months, the market has still regained positivity. So while it may look like it's weak right now, the market should improve. Another stat is midterm. So we've got this combo of interest rate hikes and a combo of midterm election results coming through. A very negative style year, but the payoff the year after still being good. So the question will be, are you going to be a bear over the long term here for the next couple of years in markets? I don't think so, and I think a lot of you out there are coming to that same conclusion. This could be a real opportunity that is also based in seasonality. We see a period of January, February, March being highly volatile in markets in general, and of course the tech sector generally being the weakest. But look at that April, May, March kind of stat, that turnaround story that often happens in tech. There is a lot of seasonality pointing to some volatility still, some key levels we'll be looking at, but then a continuation of the bull run. So if you're freaking out, yes, there could be more downside, but at the same time, the overall picture should be positive. And that's just due to stats and also where we're at in terms of the market. A correction here, although a lot of people don't believe it, is healthy for the markets. We haven't seen an S&P 500 underneath the 20 weekly in quite some time. In fact, since the pandemic rally began, we need it to cool off. And when it cools off, it becomes a much better tradable market and investable market. A thing that goes vertical to the moon is not necessarily good. Let's get into the technical analysis here. US 2-year actually coming off its peak. So that wasn't really the big catalyst for why it continued to fall. We're just in uncertainty, and the market hates uncertainty, and that's one of the big bits. Also, VIX going up, of course, uncertainty and sell-off from the algos, continuing that run up to the FOMC statement. We probably expect volatility to continue through to possibly that Wednesday period. And the VIX traders that have been long this week have been happy, but you've got to be nimble and fast in these markets. Remember, when the VIX is above 20, guys, it doesn't mean swing trading the market. It generally means scalping, day trading, and finding investment levels that you like. PCC, not much to report, still sitting around 1-to-1, showing that there's a good balance of puts and calls in the current market. And this could be starting to show as well if we see these puts starting to rise up there and hitting key supports on technicals, that maybe we're forming at least an initial base in the markets. We'll continue to watch that. Silver hit the target. So 24.50, ding, ding, ding. We hit the resistance and we've sold off a little bit from that point. Another strong day from silver. We reported on that as a breakout through the last couple of days. And commodities have done really well. Platinum, palladium, silver, and even gold, all still looking quite strong. And when we put this in perspective of a weekly, you'll notice there's still a large runway to be had here should we see the turnaround story continue. So we're looking for pullbacks here, movements to things like this next resistance at the 25.37. And if it manages to get through there, then we could even be talking about a really nice rally here in silver moving forward. Gold is similar. It got through 1830. It's now sitting on 1841. Next big resistance is 1870. And when we go into something like the daily, you'll notice it kind of looks weak here. It looks like, oh wow, there's a shooting star style candle. If the market is able to breach this level through day trade, you expect the market to continue on to something like an 1870 in the next couple of sessions because it's taking out those stop losses. Be wary around 1830. We need turnaround on the smaller timeframes. Like we always say on this channel, lightning bolts, double bottoms, accumulation bases, engulfing candles. All of these types of technical analysis is what you want to see at these key zones. It's really important we see that. On oil, Texas, of course, or US oil here, we have the sell-off kind of signs. We have two rejection candles following each other coming into the previous resistance being support. We may come down to the 20 moving average here. We'll need to watch that. We notice that 20 moving average has been a bit of a dip buy day trade style. So if it continues to sell off, be wary around this 80 to 81 for US oil, and it does still look weak. So smaller time frames, everything else, we hit our profit. At that point, you're really just looking for further consolidation. It's kind of like what we've always done with oil. We wait for consolidation, we trade it. We wait for consolidation, we trade it. Down here was amazing. Here was great. Consolidation occurred. We got the breach, we traded it. Consolidation, we got the breach, we traded it. That's what you're looking for on the market. So we'll come back to this on the weekend video. Let's move over to stocks though, and Tesla holding up amazingly well, just underneath 1,000, but the rally happened upwards of 4% and then sold straight off into the $1,000 market. It doesn't look strong on a chart, and with the current sell-off in the futures, if that continues down, you'd have to think Tesla may be trying to play a little bit of catch up very, very soon. So we've got a sell-off going on here currently in the markets underneath 1,000. We have supports being found, but it looks wary on the daily. Rejection wick, a movement under here could really start the algos. And we asked in the previous video what you think as a community this will go to. A lot of people answering with 880 into our previous trend line and around that 900 bracket. So while Tesla may fall, it still looks very strong in terms of sentiment overall. I mean, it's holding much better than the rest of the markets at this stage. Be careful around 1,000. It still remains day trade and scalpy. Let's move over to Apple. What's going on there? Weakness. We reported the weakness here on Apple. It rallied, went to 170, sold off, big sell off here. And this opens up this idea of Apple coming down to like a 150 or 152. Why? Because it's like a double top. We take the tops or the resistances over here, we take the range, we extrapolate that out, and that's when it hits that 152. We've also got that great trend line that we've been using since really early days of the pandemic, and that's been a very solid level for Apple. So we do have great support lines coming up. It just hasn't hit it yet, and further weakness or any rallies probably will be met by negative sentiment at this stage. Until we snap above these kind of previous resistances like 170, it's looking negative on the big Apple at this stage. Let's move over to ARK. No signs of recovery here yet. Weekly still down, still bad on the trade. Every rally this thing has tends to be met by quite a lot of sell demand. But you know, it's good because we can start to move down some key levels. We'll be looking for breaches. $81. We've now rejected that 3 times with wicks, a pretty big key zone. We probably expect further weakness. You can see the flow of funds probably coming out of this at the moment. People are losing faith in ARK and ARK in general. That's usually a time where you start to say, "Whoa, wait a second, we're kind of interested in this sector and these hypergrowths," but it doesn't show signs of accumulation bases. We've got a weekly 200 coming up. We need double bottoms. We need lightning bolts. Wait for the accumulation base. Otherwise, we'll be stuck in another barber style situation, and you don't really want to be in that. When the markets fall like this, they can move very, very quickly. And for some people, what they're doing is they're taking the distance of the previous fall off, they're extrapolating that out, and that's pulling us back down to basically pre-pandemic highs, so around that $60 to $62. Will it happen? Time's going to tell. We're going to be looking every day at this to find that base. Move over to IWM, the Russell 2000, that Wyckoff distribution, obviously the false breakout we had up here, which has turned out to be kind of a Max Payne style scenario. We now have what is pretty much a massive break underneath. Unless the Friday session can do some miracles, maybe it'll rally. We'll find out. The current futures are definitely selling off, but we'll find out there. 210, it would have to breach back above to really reverse this, and it's still looking quite negative. With a Wyckoff distribution, this is showing us that the small cap companies not only are susceptible to raising the interest rate, but also they're not healthy. People don't like the valuations on them anymore. And this is pointing towards a 184 for IWM before we might actually start to form base, or even lower. Do we hit a weekly 200? I hope not, but that's the kind of thing that's going on. Rallies here are going to find tough times. 210, we've got previous supports being resistance. That's going to be a bit of an issue. And it just throughout this, remember, be nimble, be fast. Bear markets aren't easy. Waiting for accumulation bases are boring, but once you do it and once you start to see these things, it can pay off because you haven't triggered like everyone else and FOMO'd into the wrong zones. Let's move over to the NDX. It's well underneath our full-on ascending channel here. This is our community channel we've had for some time, and you'll notice that it rallied up here and actually off the bases, it almost hit the trend line and then just sold straight off it. So it was very aggressive, and it looks like the futures market is trying to push down to this 14,600. Now, what is around 14,600? The monthly S3 pivot. That's the support 3 or the S3 pivot. Basically, we have at the same point as that previous support back in September, October, and previous support back over here in July. So this is where we expect the market to probably try to find some kind of buying pressure. It's exactly where you expect it to occur. And we look here for lightning bolt, smaller time frame, day trades, double bottoms, those types of reversals. That's the thing you want on the Nasdaq at this level. If it shoots straight through it, well, then we have to start looking at the next level. And I think the S&P 500 or 14,000 here will be the next level for it. So be careful. We're going to start needing to draw fibs on the whole thing here as well, which basically means we take the full distance, we draw our fib retracement, and we say, okay, well, if the market's coming down, where is a key zone? So 23.6 is very common, and of course 38.2 in that deeper pullback that really should mark the worst of the correction should it continue down. At this stage, we're looking at that monthly S3 and the previous support. S&P 500, it looks like this weekly 20 is going to close below. Next stop is generally the 4,300 here, or the weekly 50 exponential, where we have previous support, which could become support again. It may even happen, who knows, before the Fed come out with their announcement. Seems unlikely, but you never know. We need clarity in times of uncertainty, and this is what's causing all of this mass hysteria and mass sell-off. The market hates uncertainty, And it's really punishing a lot of traders that have probably taken over leverage in this last bull run over here. And if that's you, it's really unfortunate. I'm not happy about it. That sucks. But it is one of those things that you've just got to be aware that in the markets, they love taking advantage of a whole bunch of things. And when the sell-offs occur, this may be your biggest sell-off yet in the stock market if you're new to it. They are brutal, they are quick, and they often have a lot of fake kind of moves to the upside really quickly, similar to the last session, and sell-offs down. We do expect at this stage probably to close underneath the weekly 20, and we'll come back to you with some clarity there. It looks like the Nasdaq is the one that's going to hit the major support in the next session. Let's move over to semiconductors quickly. Another one that's hitting the first support level for us, 275 getting reached. Big sell-off occurred straight into that level. There is also, of course, the 260 after that, and then so on and so forth. So will the next session open up red and then possibly go green? Watch the zone, watch the Nasdaq, be nimble, be fast, and of course, be making sure that you have a stop loss, a take profit, and an entry point if you are looking to trade. People that trade without stop losses can get stuck in some really bad positions, and it's pretty unfortunate. Move over to the crypto market. Now, things here are not looking great, are they? Bitcoin is getting pressured. We had the close of the US market. It was looking okay, and then all of a sudden it just sold straight off. And it's been following a little bit of the Nasdaq here. We're kind of on the point where if we don't rally here in the next 24 hours, we'll get a new close underneath 40,000. That's a close on a significant time frame. And will we then be pressuring 30,000 before you know it? A lot of people have been talking about this head and shoulders, the left shoulder, the head, the right shoulder. Pretty big deal here on the markets. It's not looking good. We'll have to find out the next 24 hours whether it can rally back up. But do be warned, this is not a healthy looking market. If you're yet to enter into this type of thing, you're looking for those accumulation bases to show, okay, cool, here's the strength. Now we see the rally, similar to over here where you get that rally. There's plenty more usually on the table when crypto gets started. Not a good sign. And the same thing's coming through Ethereum. A new low, will it close below? The previous candle doesn't look great. I mean, that's a full-on movement up and then a bang rejection straight back down. Not looking that positive at this stage. Just a reminder in the news, FOMC statement, federal funds rate, and all of that big stuff is next week, Wednesday, January 26th at 2 p.m. to 2:30 p.m. New York time. Be careful out there, guys. Make sure to subscribe if you enjoy the channel. Please give it a thumbs up. It does help us out. And comment down below with any questions that you might have. See you soon and have a great Friday worth of trade and, of course, a great weekend. Bye for now.